Hey everyone, welcome back to the channel. Today I am diving into Duolingo, the company behind that little green owl that is quietly built one of the most engaging and profitable education platform in the world. Duolingo's mission is simple: to develop the best education in the world and make it universally available, combining education, technology, and entertainment, what I call true edutainment. The company makes money mainly through subscriptions, ads, English tests, and in app purchases. And what I personally love is how simple and sticky this business is. People build a daily habit with it. They log in, do lessons, maintain streaks, and that habit is what creates long term value. The language learning market is massive and still growing because we all want convenience. We all want to learn new skills from home at our own pace, and Duolingo fits that lifestyle perfectly. On a big picture level, the company has been growing incredibly fast. Since going public in 2021, revenue has been nearly doubled with a 3-year CAGR around 42% and a 5-year CAGR close to 52%. That tells me this isn't just a fun app. It's a global education platform scaling rapidly and profitably. Before we dig deeper, remember this content is only for educational purpose only and not a financial advice. Always do your own research or consult a licensed financial advisor before making any investment decisions. If you enjoy long-term investing insights like this, make sure to subscribe to my channel, drop a like and share your thoughts in the comments. It really helps support the channel and the peaceful community. Now let's look at Duolingo's latest quarterly results for the third quarter of fiscal year 2025, which ended on September 30th. Revenue came in at $271.7 million, up 41% year over year, while total bookings reached 281.9 million, a 33% increase. Gross profit was 196.9 million, with a strong gross margin of 72.5%, only slightly lower than last year due to higher AI and hosting costs. Daily active users grew 36% to 50.5 million. Monthly active users rose to 20% to 135 million. And paying subscribers jumped 34% to 11.5 million. Operating income nearly tripled to 35.2 million, lifting operating margin to about 12.9%, while adjusted EBITDA hits a record 80 million with a 29.5% margin. Now, Duolingo reported net income of $292 million, but that figure includes a one-time tax benefit of 222 million from realizing deferred tax allowance. If you remove that, the true underlying net income is around 69 to 70 million, which means this quarter's profit is inflated by a non-recurring gain. That one-time tax benefit temporarily lowers the company's PE ratio. So valuing Duolingo purely on earnings would be misleading since that level of net income isn't sustainable. It's better to focus on cash flow instead. And here the company continues to shine, generating 84 million in operating cash flow, up 50% year over year, and 77 million in free cash flow, up 51%, with a 29% free cash flow margin. Over the first 9 months of the year, Duolingo produced 280 million in operating cash flow, up nearly 39% from last year. They ended the quarter with over $1 billion in cash and no debt, and deferred revenue rose to 444 million. Overall, Duolingo continues to deliver strong growth, expanding profitability, and excellent cash generation. proving it's one of those rare tech companies that is growing fast while producing real high quality cash flow. In their latest report, Duolingo's management emphasized one of their key principles to take the long view. The CEO Louis von Ahn said the company is focusing on three core areas. First, teaching better through AI and product innovation. Second, growing daily and monthly active users. And third, improving monetization over time. What I really like here is that they are not chasing short term revenue, they are investing in long term engagement and quality learning. They have shifted more resources towards improving teaching effectiveness and user experience, even if that means monetization grows a little slower in the short term. That is the mindset of a company building for the next decade, not the next quarter. Management also highlighted the growing role of artificial intelligence in their platform. They believe AI can make Duolingo as effective as personal tutor. We are already seeing that with new features like AI powered conversations, flashcards, and guided video calls that enhance retention and learning outcomes. They also expanded into new subjects like math, music, and chess, which shows now Duolingo is evolving from the single app language platform into a broader learning ecosystem. Looking ahead, the company raised its full year guidance again. For fiscal year 2025, they now expect booking of about $1.15 billion, up roughly 33% year over year, and total revenue just above 1 billion, growing around 38%. Adjusted EBITDA margins are projected at about 29%, showing that even while they invest in AI and marketing, they are still improving profitability. They also expect only about a 1% increase in their share count this year, which means dilution is minimal. Overall, management's tone was confident and long term focused. They know that continuing to build engagement and AI capabilities today will translate into much stronger monetization and cash flow tomorrow. It's a very strategic, patient, and disciplined approach, something personally I admire as a long term investor. So, after analyzing all the fundamentals, it's honestly very hard to find anything wrong with this company. Everything Duolingo has done this quarter is perfectly fine. In fact, they have exceeded nearly every key metric across revenue, users, profitability, and cash flow. But if we just step back and look at the price, the moment earning came out, the stock suddenly dropped to around $189. That's roughly a 25% decline from where it was trading before. And when we see that kind of price action, our natural reaction as investor is to start questioning ourselves. Is there something wrong with the business? Is there something I am missing? But here is the key point. We often let our decision be dictated by the price action, not by the fundamentals. As a business owner and a long-term investor, your focus should always on the fundamentals because that is where the truth lies. The reality is, Duolingo's fundamentals are strong, the growth is consistent, and the company has outperformed on every front. So there is nothing wrong with the business. The only thing that changed was investor emotion in the short term, not the company's long term story. Now, how I see it this as an investor, just like the CEO mentioned, Duolingo is focusing on three things: improving the quality of education and content, expanding user growth, and taking a long term view instead of chasing short term monetization. And that is probably what made Wall Street nervous. They saw management shifting focus away from the immediate revenue and towards building long-term engagement. And they assume that future booking or revenue growth might slow down. But that is the kind of thinking that looks at the next quarter, not the next 5 years. For me, I actually like this direction. Because when a company prioritizes product quality and user experience, it builds stronger loyalty. And that is what compounds over time. Now, speaking of the stock itself, I have personally been invested in Duolingo for a while. My first buy was around $260 per share, and after this recent drop, it gave me a chance to add more at a huge discount. But remember, just because I am buying doesn't mean you have to buy as well. Always do your own research and invest according to your goal and risk tolerance. At the current price of around $201, Duolingo's market cap sits near $10 billion. Based on trailing 12 months numbers, the company trades a price to sale ratio of 13 times and a price to operating cash flow ratio close to 30 times and a price to cash flow ratio around 30 times as well. I'm not using PE ratio here because latest net income was inflated by that one-time tax benefit of roughly $222 million, which makes earning and PE look artificially low. Cash flow metric give a much clearer picture of real profitability. And when I see business with 20 plus percent gross margins, strong user growth, excellent cash generation, no debt, and over $1 billion in cash, that kind of company I'm comfortable holding long term, even when the price swings in the short term. So now we have gone through the fundamentals, the management strategy, and the valuation. I would love to hear your thoughts. What do you think about Duolingo? Is it a buy at these levels, or do you think the business model, or do you feel it's not the right fit for you? Drop your review and opinion in the comment below. I genuinely enjoy reading your perspectives and learning how everyone sees the market differently. Don't forget to like this video and subscribe to the channel if you found it helpful. It really supports the peaceful investor community and helps more people learn about long-term investing the calm way. Thank you so much for watching. Take care and I will see you in the next one. Thank you.